Hey everybody, Chuck Barone. It is Tuesday, January the 2nd, 2024. Happy New Year, everybody. Man, 2023 went by way too fast. And in my opinion, wasn't a very fun year. I'm certainly hoping that 24 is a better year for everybody. Myself especially, family. And it was nice to have the vacation and kind of get my head together and go over some stuff and make some plans for this year. It's going to be a great year, man. We're happy to be back. As always, we want to welcome everybody here back to the show. And as always, thank you guys for your support. We're counting on you guys to keep us going this year. We're going to really try. I have some plans in my head of some stuff I want to do with the show that's going to make it better and more interesting. Stay tuned, guys. All right, so let's talk about these markets today. First day of a new year. Kind of started off a lot looking like last year, didn't it? Mixed markets, uncertainty, confusion. So here's where we go. Okay, so ending the year, everything was all wonderful. It was going to be rate cuts. The cycle was over. The inflation fight was won. Stock market rallies like crazy. Bond prices rally like crazy. Yields falling. What a difference a day makes, man. So today, Apple comes out. Not great news. You know, they got some issues. And that sure tanked the NASDAQ hard. And everything else kind of followed suit. So we look at this year, okay, so stock market today mixed because the Dow actually ended up eking out a small gain. The Dow up 25 points, sitting at 37,715. So it tells you how big 25 points is. It's literally no change. As I mentioned, the NASDAQ tanking pretty hard today, down 245 points. It's a big number. 14,765, and it was up over 15,000. Looked like the NASDAQ was poised to make a big run, continue a big run, I should say. And it doesn't look like that's going to come to pass, at least right this minute. The S&P, the broader market, down today, down 27 points, 4,742 on the S&P. Not a great start for the markets today, at least the stock markets. The same with the bond market, tanking out again too. So if you look at bond yields, it looks like what we were seeing last year, these crazy numbers. Bond yields spiking up and down all over the place. It looks like we're in for a little more of that in 24. So you look at the bond yields today. So prices fall, bond yields rise, right? 10-year, 3.94%, up 8 basis points. 2-year, 4.32%, up 7 basis points. The bond market's not supposed to be working like this, guys, where it's whipsawing all over the place from day to day. Doesn't have any real clear direction. There's no stability or certainty to it. The bond market's where, you know, you're supposed to be like watching paint dry or grass grow. There's supposed to be not much excitement to the bond market. This is different, and a lot of fun for people who got in, you know, hoping to get these yields, lock in some yields, seeing the prices of their stuff whipsawing all over the place. But I guess we're back to the same uncertainty until we really get a clear direction from the Fed as far as let's see a real rate cut. If they're going to do it, I always say, why wait, man? If you're planning on doing that, do it, and you know, you got a January FOMAC meeting coming. Do it. Cut him. Anyway, so here's where we stand. Now there's a lot of uncertainty about rate cuts. So the dollar rallying up, right? Look at this. I think it was last week, the last time we spoke, the dollar was sitting around 100, getting really close to just to the Mendoza line there. Today, up almost a whole point, 102.24. Dollar, you know, rallying back up pretty strongly. You don't see the dollar gain 2 points on the index in a day or two. That doesn't happen very often. So we're just seeing some crazy stuff already here. You got gold and silver with a stronger dollar coming down a little bit today. Gold down $3.70. sitting at $2,058.30 for an ounce of gold. Silver down 14 cents, $23.64 for an ounce of silver. Still fair pricing. I would like to see silver a little bit higher, and I think we will. But all things considered, not bad pricing for gold and silver. Oil today down. Oil down $1.16 a barrel. Now sitting at $70.49 for a barrel of West Texas Intermediate. Exactly where we envisioned it being. You know, that's the trough where it seems like oil wants to trade between $70 and $75 a barrel. It doesn't seem like the Middle East has much power right now to manipulate prices like they have in the not so recent past, right? Or not so far past. In the recent past, they had the threat of cutting production, or when they did actually extend their cuts. I remember oil spiking up to near $100 a barrel. I told you guys then, as I tell you now, this is where it wants to trade between 70 and 75. Now we're getting to the lower part of the trading range there, so I would expect a small bounce. You know, we'll see how it trades. Bitcoin today, up $1,330, now sitting at $44,864, so Bitcoin about to hop over $45,000 per Bitcoin. The rally's rocking. I was reading an article today that said Bitcoin could be $80,000 by the end of 2024. So the Bitcoin cryptosphere now looked at a little more optimistically. You got some really big players interested in this now. Some of the biggest players in the world. So we'll see how this all plays out. I think that if the SEC continues to, you know, put the kibosh on these these exchange traded funds, that Bitcoin could come down a little bit. But once they get the approval and that actually starts trading, that you're going to see Bitcoin fly. That's why they're predicting possibly 80,000 by the end of the year. All right, as we do every first day of the week, we talk about what we're going to be dealing with this week, what kind of news we're going to get as far as the big data releases and how they could affect the markets. This week's not going to be kind of a nice quiet one for a change. It's, for I think, a good way to start the year, right? So today we'll get construction spending. I have not seen that report yet. It's expected that construction spending rose roughly little over 2%, about 2.5%. Is that they're building more, or is that just prices higher? We'll have to see when the report actually comes out, but not much in the news today. Tomorrow, on Wednesday, we'll get the Mortgage Bankers Index, which is going to show, you know, real estate's continuing its slump. And we'll also get the ISM Manufacturing Index. This is a good report because it gives us a real good, clear snapshot of where things are as far as manufacturing goes. A lot of trends in manufacturing and costs associated with it. So it's a good report. It's looking like it's going to be positive tomorrow. We'll see when we actually get the report. On Thursday, as always, we'll get jobless claims. Last week, they came in at 218,000. They have not made an estimate for this week yet. We'll see. If I think, obviously that's setting the bar, 218. If it comes in less than that, they're going to talk about hot labor, hot jobs. If it comes in more than that, they're going to say the Fed's getting what it wants. So I think that, no matter what happens on Thursday, it'll be pretty good news one way or the other. But either way it falls, I think it'll be good news. And you get Freddie Mac, their report on Thursday, which will show their interest rate on mortgages falling to 6.61%. So that's pretty quick decline on mortgage rates, from about 7.5 down to 6.6, almost a full point. And that's just on the rumor of the Fed cutting rates. I've seen some specials. Lending is what I do. I'm a mortgage broker. And I've seen some specials now where you can even on government rate loans get rates less than 6%. So rates coming down for real estate. Your host here might actually have a chance to make a little bit of a living in real estate this year. So that's something we're optimistic about. On Friday, to close out the week, it's the big news day. We'll get non-farm payroll report. That's the big one, the jobs report from December. They're expecting 170,000 jobs created in December. That's down from 199K in November. They're expecting the unemployment rate to click up to 3.8% from 3.7%. I guess that kind of gives us a little bit of an idea of where they're expecting jobless claims to come in, even though they're not publishing anything yet. You know, we'll see. This has been kind of the thorn in the Fed's plan so far, with the numbers seeming to beat their expectations every single month and even every week on the jobless claims. So we'll be following that one closely. Also on Friday, we'll get factory orders, which are expected to be up almost 3%. Which is good for our manufacturing. Hopefully between those two manufacturing reports we're going to get this week, we'll get a clear idea of where manufacturing is. And if we're on our, you know, this is the kind of stuff that gives you an idea of where we're going as far as recession. There's not much talk of that right now, even though we had our phantom recessions, right? And everybody certainly believed that we were going to have recession, like endless, you know, how long we speculated on that? 2 years pretty much. Thought we were in the recession in 22, right? Last year waiting for it to happen, and what we got instead was a giant rally and everything going up. Houses, real estate, I mean, pretty much whatever you were holding had a good year in 2023. So it's going to be a fascinating year. We got a lot to look forward to this year. We got an election this year. We got just so many things coming down all at once. It can be kind of overwhelming. Luckily, we'll be here to bring you guys the news that's important and kind of break it down for you guys so you don't have to be try to speculate on what in the hell all of that stuff really means, right? All right, so let's talk about some interesting stuff today, since there's not a lot of statistical stuff, but just some stuff I thought you might want to be aware of. It's interesting. Private equity companies, the scourge of the universe, right, have now built up and are sitting on cash reserves, dry powder, $2.6 trillion. $2.6 trillion. Apollo, $55 billion. KKR, $43 billion. Blackstone, $29 billion. Carlyle Group, $25 billion. And on with all these big equity funds. What do you think they're going to do with the money, guys? Think it's going to be good for us, the working people? I'm guessing, we'll see them coming in and continuing to buy up residential real estate. I'm sure they're going to dominate the stock market like they always have, and they'll be the ones leading the way. They can actually move markets because of the size of their holdings and the size of the transactions they put on the tape. I think that we'll see them play some kind of role in this commercial real estate story. As you guys know, commercial real estate is the big vulnerability. Prices in commercial real estate basically collapsing. It's the quiet storm. It's the quiet tsunami, the one that nobody's really paying much attention to. But I'm going to guess that as these buildings come down in value, collapsing in value, private equity money is going to be there to swoop them up on the cheap like they do every single thing they can. Speaking of commercial real estate, let's talk about it for a second. The commercial real estate collapse is continuing. It's quiet, though. It's been very quiet. Not a lot of headlines in the financial news. Nobody freaking out about it yet. But check this out. An LA office building just sold for 52% less than it sold for in 2018. Another high-rise, the third tallest in LA, third tallest building in LA, just sold 45% less than it was sold for in 2014. So real estate, this collapse in commercial real estate is centered around office buildings, right? Places where people used to go to work. Well, with work from home and all kind of other corporate stuff going on, those office buildings in significantly less demand right now, prices falling, it's a catastrophe because of no occupancy, no new people wanting to buy. They're still trying to hold prices up, but now it's getting cutthroat. Commercial is going to be, it's not in the news right now, here today, January the 2nd, but we will be hearing about commercial real estate a lot in 2024. Warehouses and other, commercial stuff is doing good, well, or better. But it's the office buildings that are the big problem. Listen to this, guys. 44% right now, 44% of commercial loans are underwater, meaning they owe more than the buildings are worth, right? Estimates, Wall Street estimates say 10 to 20% default on commercial paper. Banks losing around $160 billion on this commercial real estate collapse. So they're not doing much to, they're not talking about it much, but it's happening. And when you're talking about losses of $160 billion, the same report also said that it could take office buildings decades to get back on where they are now, or back up to where they were before the collapse started. So not good news. And lastly, just a little tidbit here I thought was interesting. Yes, we've been talking about U.S. consumers continuing to struggle with prices and paying bills, paying, stuff. Typical U.S. household would now need to spend more than $11,000 more to purchase the same goods and services they purchased in 2021. Well, that's kind of crazy because the average household income in the U.S. is just a little over $70,000. They're talking about 15% more just to live the same. Then they wonder why everybody's pissed off, why everybody's angry, why everybody wants change, unhappy. How they've been sticking to us working people for so long, spend more, get less for your money. People are getting sick of it. We're going to see a lot of stuff with labor this year. I believe the unions are going to be, you're going to hear a lot about that too, as workers fighting back a little bit. So that'll be an interesting tug of war going between, back to the future, I guess. It's going to be a fascinating year here in 2024. We're going to be here to bring it all for you guys. Anyway, that's it for the day. We'll be back tomorrow to bring you the news you need. As always, we thank you for your support. Please hit the subscribe button if you haven't already. Please hit the like button. It changes the algorithm around, gets our videos out in front of more people. Double check the bell, make sure it's on. That way you get your notifications every day when our new video comes out. And as always, hit me up in the comments with your questions and fun stuff you guys do. I'll be on there for a little while today, so we'll talk to you then. We'll be back again tomorrow, guys. Until then, take care. Thanks.